Hello, and welcome to another MCO market update on Render. The Render chart is currently trying to reverse here from this support zone that I think has been on the chart for more than a year. Okay, since the price top in the third wave here was struck in March 24, we were watching for a pullback into the support region. Now in August, there was already an opportunity to start the fifth wave to the upside, but it was only a three-wave rally. It moved down again and formed five waves down. Now, I can make a case for one more low still, and we will talk about that when we zoom in. But I think it's looking more and more likely that a low has formed, but it will depend on certain support levels that now need to hold. Again, I will zoom in a minute, and we can take a quick look at the relevant levels, micro support levels, and so on, and the structure. But I always find it helpful to start zoomed out so that everybody's on the same page with regards to the larger time frame context. Currently, the idea is that this price chart here, the render chart, has formed the three-wave pullback into support. Ideally, in whatever it's doing now, ideally it's holding above the $1.53 level, because any break below that level would be too deep for this fourth wave. The idea is that a third wave topped in March 2024 that was around $13.60. Then let's say the A wave element of that correction, like every correction is typically a three-wave move, right? So A, B, C are the labels for the waves in a correction. And the A wave element finished in August last year, pretty much when it reached here the 38.2 retracement of the support area, 38.2 retracement of the third wave. And it was already potential, right, for the price to rally from there and it did. It just didn't form a new high and didn't form five waves up. But remember that a fourth wave ideal target, often ideal target, is seen as the 38.2 retracement. And we reacted to that level. So it was kind of, I don't want to say it was clear, but it was probable for a rally to occur. The rally occurred, but the market failed to form five waves. So it fell back into support and has not reached a 50% retracement. I mean, if we get one more low in yellow wave 5 off C of 4, so could be one more low. I will show you now. A, B, and then in the C wave, 5 waves. 1, 2, 3, 4, 5. Then, $2.33 would be potentially an ideal target. It would be the next support level to which the price might react. So it's just the next level, It's just the next level that we can pay attention. To, but at the moment we don't even know if we get another low. That really will depend on the nanostructures. So we will take a look at those now. Overall idea unchanged. Yeah, one more rally would be ideal. You could see that more like a medium-term target. Maybe it depends on. But remember, the correction in the fourth wave, it took a year, even more than a year. We don't even know if it's completed. It probably is, but obviously trend reversals are always fragile, right? Very, very fragile. So they need to prove themselves. And therefore, that fifth wave rally that might take us into that upper blue target zone here, in the area $17.61 plus, maybe even $27, $28. That can take quite some time. That rally can take quite some time. So we'll see. For now, we are watching if the market gives us some kind of a bottoming confirmation. And what would that be? What would that be? Surprise, a five-wave move up. So do we actually have that? And yes, we actually have a five-wave move to the upside. We talked about that in the previous videos. I think I recorded a member video a few days ago. And since then, the price has moved closer to that target area here, the $4.85 level. I mean, it came to $4.78, $4.79. I mean, hasn't quite touched it, but does it need to touch it? Not necessarily. That's already close enough, and we have formed the five-wave move up. Now, the price needs to form a higher low. So if the price now gives us a deeper pullback, which could be circle wave 2 there in the white scenario, and the pullback at the moment, at least, it looks corrective, which means there is no evidence that a more substantial top has formed. As long as pullbacks remain corrective and they're forming higher lows and they're holding above the 78.6 retracement, which is down there at $2.87, the overall focus can be on higher prices. So I see the pullback as a potential wave 2 correction. That is subject to change. It really depends on how the structure is looking like. So at the moment, it's a bit too, there's just not enough there to work with. Whatever's happening here could be part of this A wave. Then we might see a B wave. Then we can calculate a target for wave C. But for now, yeah, it's looking okay. Now, why am I saying we could still get another low? Isn't this a 5-wave move up? Doesn't this guarantee a reversal? It does never guarantee a trend reversal, right? But if we see a 5-wave move up and a 3-wave pullback, then we have a decent setup. The risk is that the move down forms one more low. So it's all about the correction, the structure of the correction. The rally here could also have been, because it's a bit of a double bottom situation here, an A wave up, a B wave down, and the C wave up, and then we break down. There's no way of knowing it. It's just to understand the risk, and it means that if we get another low, it might just form a marginally lower low. We might not have bottomed. Just be prepared for that scenario. And again, which level is it that helps us distinguish between the bullish and the bearish momentum? It is the $2.87 level down there, 78.6 retracement. Additional support levels in that Fibonacci box are $3.72, also important. Then $3.45, $3.20, and yeah, $2.87. That's the update on Render. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.